All right, let's get right into it. Today, we're talking about a company that isn't just treading water in this economy. Nope. According to our analysis, it's actually building the foundation for what could be a massive, monumental run. And that company is SOFI Technologies.
And wow, that quote, it just nails it. It really gets to the very heart of what we're talking about today. See, most people look at SoFi and just think, another lender. But the big idea here is that if that's all you see, you are missing the bigger picture completely. The claim is that SoFi is building a brand new kind of financial machine.
Look, we've all seen the stock chart, right? It's been all over the place. SoFi was one of those pandemic darlings, and its whole story seemed tied to the student loan situation. But here's the thing. While the market was obsessing over that one piece of the puzzle, SoFi was quietly in the background building an absolute financial fortress.
So how'd they pull it off? Well, it all comes down to one single game-changing move that totally transformed the company from the ground up. It's the thing that separates them from pretty much every other fintech out there. And that move was getting a bank charter. This is the first crucial piece of the puzzle.
So what in the world is a bank charter, and why is it such a huge deal? Well, think of it like an official license from the government. It lets you operate like a real bank, which means you can take in customer deposits and then use that money to fund your own business. For a company that lends money like SoFi, this is, well, it's everything. And this slide just lays it all out. The before and afters is incredible. Before they had the charter, SoFi had to go to these expensive, big money capital markets to get the cash for its loans. That's a high-cost, high-risk way to do things. But now, with a charter, they can use their own customer deposits, which are sticky and super low cost. This one change just slashes their cost of capital, making the whole operation way more resilient and, you guessed it, way more profitable.
And the proof is in the pudding. The numbers are just undeniable. Just look at the deposit growth. Record highs quarter after quarter after quarter. This isn't just some idea on a whiteboard, it's a real strategy that's pulling in a huge, low-cost pile of cash to fund the business.
This is all powered by a strategy that the analysis calls land and expand. It's pretty brilliant. First, they land you. They get you in the door with a really attractive high-yield savings account. Then, once you're in their world, they expand. They start cross-selling you everything else you could possibly need. Personal loans, credit cards, investment accounts, the ultimate goal, to become the absolute center of your entire financial life.
But hold on, because the bank charter, as huge as it is really only half the story. And this is where things get really interesting. The argument isn't that SoFi is just a bank. It's that SoFi is a tech company that happens to own a bank. That's a critical difference, and it leads us to the second pillar of this whole thesis, its hidden tech engine.
And the name of that engine? A company they bought called Galileo. According to the analysis, this right here is the true hidden gem inside the SOFI machine. It's the part that almost everyone seems to overlook.
So you've got to think of SoFi as having these two identities working together. On one side, you have the bank, the part we all see. It faces the customers, offers loans, and makes money from interest. But then on the other side, you have the tech company, Galileo. It provides the back end, the digital plumbing for other banks and fintechs, and it generates this awesome high-margin revenue.
So what makes Galileo such a powerhouse? Well, get this. It actually provides the tech for SoFi's competitors. That means SoFi gets a piece of the action even when its rivals are doing well. It's a high-margin, super scalable business that perfectly balances out the lending side. You know, when the economy's tough, companies need Galileo's tech to save money. When the economy's booming, they need it to grow. It's basically built to win no matter what. Okay, so we've got the two pillars, a super strong bank and a beast of a tech platform. Now, let's switch gears and look to the future, because the argument is that SoFi is staring down two massive catalysts that could flip its current struggles into some seriously powerful tailwinds. Now, you have to remember the context here. This is absolutely key. SoFi built this whole thing and actually became profitable during one of the toughest, most aggressive rate hiking cycles we've seen in decades. That kind of environment is normally just brutal for lenders. So if they can actually thrive in this kind of storm, it begs the question,
What happens when this headwind finally stops blowing? What happens when the Federal Reserve pivots and starts cutting interest rates like everyone expects them to?
well, according to the source material, it kicks off a powerful chain reaction, like dominoes falling. First, rates drop. That means SoFi's cost to borrow money falls, which widens their profit margins. At the exact same time, demand for personal loans and refinancing just explodes. And that giant student loan business, the one that's been kind of sleeping, it roars back to life. SOFI is basically a coiled spring just waiting to be released. But as powerful as that is, the analysis points to something else, a catalyst that's even more significant, something that could launch the stock into a whole new stratosphere. And that catalyst is getting into the S&P 500 index. Now, the path to get in is actually pretty straightforward. You need a big enough market cap, and this is the big one, you need 4 straight quarters of GAAP profitability. That's the official, standardized way of measuring it. And right now, SOFI is knocking on that door.
So why does this matter so much? Well, once a stock is in the S&P 500, every single index fund and ETF that tracks that index is forced to buy it. We are not talking about a little bump here. We're talking about billions of dollars in automatic, sustained buying pressure. This would totally change the game, shifting the investor base from everyday traders to massive global institutions. It's like SOFI would graduate from the minor leagues to a major league foundational holding.
So, okay, let's put this all together. You've got the rock-solid bank, you've got the high-margin tech platform, and you have these 2 massive catalysts sitting right on the horizon. The big question is, what is this thing actually worth? What could the valuation look like over the next few years?
Well, when you start factoring everything in, them continuing to execute their strategy, Galileo continuing to expand, and the whole economic environment shifting in their favor, the source argues that the valuation models start to look, well, dramatically different. And the ultimate conclusion, the big number from our source material, is that a triple-digit stock price isn't some pipe dream. A price target somewhere between $100 and $200 a share is put on the table as a realistic, achievable goal in the coming years, just given the company's trajectory and the size of the market it's going after. And so the final message here is really about reframing how you look at this. It all comes down to perspective. While some people might look at the current stock price and see all the ups and downs and just see risk, the argument is that this is exactly where the opportunity is, getting in before the rest of the market fully catches on to the story.
So, to wrap it all up, the thesis is that the hard part is over. The foundation has been built, the tech is in place, and the external forces are finally starting to line up. For anyone who can see past the day-to-day noise, the argument is crystal clear. The financial machine is ready to go.